Hello everyone, welcome to this session. So, in this session, we'll be discussing the previous year paper of your CUET economics unit. Okay, so we'll be discussing the paper that took place in 2022, and we'll discuss half the paper in this session, and I'll make another video for the other half. So, we'll discuss the 25 questions here, and let's see how the paper was. Let's see how NTA ask questions in your economics domain subject. So let's start with the session and let's see how the paper was, the kind of questions are asked, and the difficulty level of the paper. So let's start with the first question. So this is the first question. The first question says that economic variables such as national income and profits can be classified under which of the following heads. So we are talking about two things, your national income and profits. So both these things, if you know the definition of the stock and flow concept, you will see and you will find that both these variables are measured over a period of time. Your national income is measured for an entire year, and the same goes for your profits. So you measure the profits for a time period, say monthly, annually. Okay, so when we assign time to a variable, we are basically talking about the flow variables. All right, and the variables that we measure at a point of time, they are called the stock variables. So in this case, your national income and your profits are your flow variables. So this is the first question. Let's move to the next question, and the next question talks about the elasticity of demand. So in this question they are asking, elasticity of demand is constant and equal to 1 at every point on the demand curve. The shape of such a demand curve would be. So as you have read that in the case of constant elasticity and that too equal to 1, it means that the percentage change in the quantity demanded is same as the percentage change in the price of a good. So that is the definition of your elasticity of demand. So if I plot a graph, so you will find that in the case of your rectangular hyperbola, this is the shape of a rectangular hyperbola. In this case, the percentage change for every movement is same for both your prices. This is your quantity, this is your price, and this is your quantity. Okay, right, let me just rub this and make it clear. So this is your price here, this is your quantity here. So if the shape is rectangular hyperbola, then we have the case of your constant elasticity of demand at every point. On this curve, at every point, if I move from one point to another point, the change in quantity demanded in terms of percentage will be equal to the change in the price of the commodity. So that will be the answer for this question. So option D is the right answer here. I hope this is clear to you. Then let's move to the next question. In the next question, it is asking, name the architect of Indian planning. So we have the 4 names here, and we have option 2 as the right option here. PC Mahalanobis was the architect of Indian planning, and we also have read about the Mahalanobis strategy, which was implemented in the second 5-year plan. I hope you remember this. This is from your Indian economy. In the second 5-year plan, right? So PC Mahalanobis, so what was the strategy of Mahalanobis? He said that you focus on the big industries, the heavy industries, and the focus after a point of time will help the industries grow, and the benefits from that will start reaching the other sectors also. So that was the plan, that was the strategy of Mahalanobis, and that is why he's called the planning architect of India. So let's move to the next question. I hope these questions are clear to you. The next question says that, question number 4, which of the following is not included in human development indicators? Human development indicators. So as we know that in human development indicators, this is also from Indian economy, we talk about health, we talk about basic sanitation, which is also a part of your health, and we talk about income, and we also talk about education, right? But women empowerment is something that is not measured when it comes to your human development indicators. So option 1 is the right answer here. All right, let's move ahead. Let's move to the next question. So the next question is is saying that which of the following statements are incorrect. All right, you have to choose the incorrect statements from this question. So option A is circular flow of income does not take place in a closed economy. So this statement is incorrect because we know that in a closed economy we have a circular flow of income. All right, so we have factors of production, we have firms. So factors offer their factor services, and for that they receive factor payments. So there is a circular flow in the economy. So option A is incorrect. So I can cancel this option because this does not contain A. So I have three options left with me now. So option B is real flow consists of flow of factor services from households to firms. So we can talk about two flows when it comes to circular flow. One is the real flow, one is the money flow. So real flow is basically the flow of services, factor services from households to firms. So this statement is correct. All right, so option B cannot be an option. So if option B is present in these options, so they will automatically cancel out. So the option left for me to choose is option 3. So which says A and D are incorrect. So option D says that money flow consists of flow of factor payments from households to firm. So this statement is incorrect because money flow means that it is moving from the firms to the households for their factor services. So option A and D are the right answer here. I hope this is clear. And option C is also correct because it says that in a two-sector economy, total production is always equal to total consumption. So whatever is being produced by the firms is being consumed by the households. So this is true for a two-sector economy. So option C is also correct. And that is why we have option D as the right answer for this question. I hope this is clear to everyone. Now let's move on to the next question. Identify the correct statements regarding money supply. So we have to check which of the statements are correct regarding the money supply. So option A is money supply is a stock concept. So money supply is a stock concept. It is true because we talk about money supply at a given point of time, and that is why this statement is true. It is not measured over a period of time. So if I have to talk about money supply, I'll say that at this day, on this day, the amount of money supplied in the economy is this much. So it is a stock concept. So option A is correct. So it means that I just have these two options to choose from because they contain option A. These two options do not contain option A, so I will not be choosing these options. So I have to decide between only these two options now. So the points of contention here are option C and option D. So let's see what option C is. So money supply is the currency with the public and demand deposits in bank, and the option D is money supply is the currency held with the banks. So clearly option D is incorrect because money supply is basically the currency in circulation and the demand deposit held by banks. So this is the definition of M1 form of money supply. So this statement is correct. So this means that option A and C are correct here. All right, and money supply is a concept of real flow. No, it is a money flow concept. In real flow we have the movement of goods and services. In money flow we have the movement of money. So it is a money flow concept. So option 1, that is A and C, is the correct answer here. So let's discuss this numerical. This says that given the following set of data, calculate equilibrium income. So C is given. We know that an investment is given. Consumption and investment are given. We know that Y, which is the income, is equal to C plus I, because there is no government sector here. Otherwise we would have added this also, the government also, but there is no government here. So we just have this basic economy, and we know that Y is equal to, if I use the terms given, 100 plus 0.8 Y plus 260, which is I, right? So this thing will move here. So I'll be left with 0.2Y is equal to 360. This implies Y is equal to 360 upon 0.2. So if I solve this, I'll get 1800. So option 4 is the right answer here. So this 0.8 will move here, and I'll have to minus 0.8 from Y. So I'll be left with 0.2Y, and then I solve this question, then I'll get 1800 as the answer. So option 4 is the right answer here. Now let's move on to the next question. The next question talks about, let's read the question. Suppose a country only produces bread in the year 2000 it had produced 100 units of bread and the price was rupees 10 per bread. In 2001 the same country produced 110 units of bread and the price was 15 per bread. In 2001 the nominal and real GDP are, so the nominal GDP is basically the GDP at the current prices. So whatever the prices are prevailing in that year, on that price we calculate the GDP. So that is the nominal GDP. In the case of real GDP, we calculate the GDP at the prices of the base year. In here the base year is given to you. It is 2000. That is the previous year. So you'll use the quantity of the current year, but you'll use the prices of the base year to calculate the real GDP. So if I calculate the nominal GDP, it will be equal to 110 into 15. So current consumption in current production in the year 2001 into the current prices. Okay, so this will give me 1650. Similarly, this is the nominal GDP, right? If I have to calculate the real GDP, I will need the current quantity into the previous year prices. So this will be equal to 1100. So I have two options, 1650 and 1100. So option 3 is the right answer here. I hope this concept is clear to you. Let's next move on to the next question. So identify the quantitative tools used by the RBI to control the money supply. As we all know, RBI uses two types of tools. One is quantitative and the other is qualitative tools to control the money supply. So in the case of quantitative tools, we have the options of your bank rate, we have cash reserve ratio, we have open market operations. All right. Beyond this, we have repo rate, we have SLR. These things are also there which fall under this criteria. So option BCD, that is option 2, is the right answer here. So always check which tool is being asked, whether it's quantitative tool or it's a qualitative tool. So in the case of qualitative tools, we have moral suasion and margin requirement. So I hope this concept is clear to you. Let's move on to the next question. So in the next question, they have asked you to match the following things. So we have certain things given over here and we have the year in which these things were established. So the planning commission was established in which year? Then we have the first phase of green revolution, then we have the Carvey committee, and then we have the first industrial policy revolution. So the first industrial policy revolution came in the year 1948. All right. The first phase of green revolution began in the 1960s. So option 4 is correct here. Then we have planning commission was established in the year 1950, and then we have the Carvey committee, which was associated with the small scale cottage industries. All right, it came into force in 1955. So A is linked to option 4. Sorry, A is linked to option 3, right? B is linked to option 4. A 3, B 4. So this is the only option in which A is linked to 3 and B is linked to 4. So I hope this is clear. So option 1 is the right answer here. So even if you knew only the first two options, then also you could have answered the question because the options were given in such a manner. So this is called the elimination technique. So you can always use this technique to answer the questions if you don't have the knowledge of all the questions that are being asked. All right. Yeah, all the sub questions that are being asked. So let's move on to the next question. So this is also a numerical here. Rupees 48,000 crore is allotted for PM Awas Yojana in this year's budget. Identify the government objective fulfilled from the statement above. So which objective of the government is being fulfilled by the allocation of this much amount for the PM Awas Yojana? So PM Awas Yojana is basically for the welfare of the poor people, wherein the government is giving them pakka houses at very, very low rates. All right, the government is building the houses and it's giving them to the poor people. So this is basically the case of your redistribution of income, right? Redistribution of income, because it is not economic stability, it is not reallocation of resources, it is not reducing regional disparities. It is majorly because it's not about the region, it's basically the redistribution of income here. So this objective is being fulfilled by the government. Now let's move ahead. So we have a numerical again here. It says that you have been given the reserve ratio, which is equal to 10%, and the initial deposit with the commercial bank are given at rupees 450 crore. The total money creation by the banking system will be, so we know the formula. So we know that when we deposit bank in the money, money in the bank, not bank in the money, we don't do that, that's not possible. So when we deposit money in the bank, so the bank uses that money to give loans. So with a given amount of money, the bank can give multiple amount of loans, all right, loans of multiple value from the initial value. So there is a formula for it, and it depends on the reserve ratio. Reserve ratio is basically the ratio that the bank has to maintain of the deposit with itself, so that if at any time the depositor comes back to ask for the money, the bank has some money to return to the depositor. The remaining amount of money is being lended to the borrowers. So 10% of the requirement is there. So of the 450 crores, the government have to keep 10% and the remaining can go on. So the formula for this is 1 upon the percentage, you can say the percentage, yeah, or 1 upon the reserve ratio. So this gives me the number by which I can multiply the amount of